In this video, I'm going to show you how to place trades on IG's trading platform. I'll be showing you how to place market orders, limit orders, normal, trailing, and guaranteed stop losses, and how to calculate your margin, plus more. And if you want to find out how to trade some of the most popular stocks while the markets are closed, keep watching this video to the end. Hi guys, it's Any, aka the NocTrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, that subscribe button, and that alert button to get alerts on all my latest videos. Alright, let's get straight into it. Let's start with a market order. A market order is an order to buy or sell a stock at the current buy or sell price. Buy and bid is just used interchangeably, and sell and ask is used interchangeably. They mean the same thing. All depends on which broker you use. So on the right hand side ribbon, you got three options: deal, order, alert. To place a market order, you click on the deal one. Put your position size. So in this situation, I'm going to put £1 per point movement, and I'm going to go buy. You can either buy or sell. If you go buy, then you're making money if the price goes up. If you put sell, you're making money if the price goes down. In this situation, I can't actually short this particular stock that I've used as an example. I'll explain why later on in the video. So for this example, I'm just going to go for a buy. Once you click buy, place your order, and it'll tell you your deal's been confirmed, and it can show on the screen here. On the little left hand side of the box, it'll show you what your active P&L is, and on the right, it'll show you how many pounds per points that you placed on this trade. You can also click this position tab here to look at your active trades. So right now I've taken the long position, which is like why there's a blue plus. It'll tell you where I open my position, the latest position, and then my current profit and loss. You can also click at the top here and expose your current P&L here, the margin requirement, the available equity to spend, and how much money you actually have in your account. Little side note for you, IG used to give you the information on the spread in a little box around here, right between the sell and the buy price. Don't know why they stopped doing that, but it was really useful to know what the spread was at any given time in a stock. But yeah, I don't know why they took that away. And then we got a limit order. A limit order is an order to buy or sell securities at a specific price or better. A limit order is not guaranteed to execute. There's two types of limit order you can do: a buy limit or a sell limit. So if I now want to place a limit order, I'm going to close my market order position. If I want to set a limit buy order for the same stock, what I would do is that I would click this order tab here and then press buy, and then I'll choose my price level in which I want to set my limit order. So for a buy limit order, you want to set a price level below the current price, because that's how you can set a limit order. You can't set a buy limit order above the current price, because that wouldn't be a better price than the current price. So it makes sense for you to set a limit order below it, because that's the only way you can do it. So for example, if I set my limit order to 250, that's where it would see, it shows you the line here where it will be placed. And then, so then I can do good till cancel or good till date. Now good till cancel means that I have to cancel this order for it to no longer be active. And good till date means that I can pick a specific date for this order to be still there. And then once this date is executed, the order will then be closed out if it's not hit. I'm going to do good till cancel. And after that, all you need to do is just place your order. Now that order's been placed. It won't show on the charts, but if you check this order sheet here, it'll tell you where your order is. And once price hits 250, your order will be executed, and then your order will move to active position. This order sheet just shows you any orders that haven't been executed and not active but are still in play. And you do the exact same thing but the opposite way for a sell limit. You click sell. Actually, you can't do that for this one. I just told you that. Okay, so let me find another stock. Let's go to the DAX. So you click order, click sell, pick a position size. So I'm choosing £1 per point movement. Pick your level in which you want your order to be executed. So if I put 1 to 12,000, let me zoom in just so you can see, because there's a lot of lines. And then good till cancel, it's already there. And then I place my order. So if price ever goes up and hits 12,000, my order to short will be executed. And you can see here my active orders. So I made a buy order for Athosis, as you can see here, and my sell limit order for the DAX. A stop loss is an order placed with the broker to buy or sell once the stock reaches a certain price. A stop loss is designed to limit an investor's loss or lock in profits on a position. You also have a trailing stop loss and a guaranteed stop loss. I'll go through those in a moment. So to set a stop loss, you need to be in an active position. So I'm going to take a trade on the DAX. I'm going to go long, though the market's selling off, but this is just a demo account, so it doesn't really matter too much. Once again, go deal, buy. I'm going to do £1 per point movement, place an order. So now I'm in a long position on the DAX. As you can see, deal is confirmed. So I'll close that. Okay, so now I'm in a long position on the DAX. There's two ways you can set a stop loss. Number one, go to positions and then you manually enter the price at which you want your stop loss to be at. So if I set my stop loss at 11700, there we go. So then my stop loss is that orange line here. So if you click on that line, then it tells you not only how many pips away from your current price, well, your entry price. So I was in the way there, I didn't realize. Okay, so here is the actual how many points you placed on the trade, and here is your active P&L. And if you click on that orange line, it'll show you how many points away from the opening price your stop loss is, and how much money you stand to lose or gain if the stop loss is triggered. And the same way you set your stop loss, you can also set your limit. So what you can do here is that you can do it two ways as well. You go to position, set your limit. So the limit is going to be above the price because it's a long position. If I set my limit at 12,000, if I go back to here, that purple line is the limit. Now, if I click on it, that shows me that I'll make £209 if my limit is hit, and it's 209 points away, and it's obviously 209 points away, but I put my trade on as £1 per point movement. It also shows you the risk to reward ratio of your trade. So that means that you're risking 1 to make 2.7, which is good. Just in the way I set my stop loss, I can also set my limit manually. So if I click X on here, all I need to do is drag here from here to here, and I can set my limit. Now obviously it's a little less accurate when you drag it by hand. I can almost get it to where it was before, kind of similar anyway. And then my limit has been set. Now the good thing about stop loss and the limit is that the limit will get triggered once you hit your take profit zone. So if that's the zone at which you want to exit your trade for profit, then that's great, and it can hit your limit and you don't have to actively close your trade. But the stop loss, it just manages your risk. So if it goes against you, you know how much you're willing to risk. And if the trade goes in the direction you want it to, the good thing about stop loss is that you can just keep moving it till it's past your entry point, and then you can set your stop loss in a green point so that it's all green. So it depends, so you're not losing anything, you're risking nothing. But that's only if prices start going in your direction. I couldn't set my stop loss here now because my price is below my stop loss, and you can't set your stop loss below your price in the long trade. And everything I said, the same works for stop loss, but in the other direction. If you're shorting, your stop loss is going to be above the price, the limit's going to be below the price, and you can move your stop loss down past your entry point once price is sold down past your entry point. Little tidbit as well, the spread is actually shown here on DAX. It just means that some of the stocks it doesn't show the spread, because that's weird, because AlphaSys, I was looking for the spread and it didn't show it there, but with DAX it showed it there. So the spread here is 2. So what that means is that your buy is 2 pips above the actual market price and your sell is 2 pips below it. The reason why your buy is 2 pips above and your sell is 2 pips below is because your broker needs to make a bit of money. So they make a bit of money off of the spread. So every time you enter a buy, for example, 2 pips goes to the broker as like their fee. Every time you sell, 2 pips goes to the broker as their fee. So if the market price is 11750 and you want to sell, you will enter it at 117, I don't even know what number I just said, 2 below what I just said. So let me just close out this trade. You also have trailing stop loss. A trailing stop loss is a specific type of stop that automatically follows your position if the market rises, securing your profits, but it will remain in place if the market falls, closing out your position if the market moves against you. The definition they gave here is if you set a trailing stop loss on a long position. So the same thing happens, but the other way around if you set a short position, but you set a trailing stop loss. So if the price goes down, your trailing stop loss will move with the price, but if it goes up, it will stay where it was before. Okay, so let's put this into practice. So let's say I took a short position. So that means sell, and I wanted to add a trailing stop loss. Now, if I wanted to add a trailing stop loss as I was taking my short position, what I could do is that here it says stop. So if you know what your stop loss is going to be as you're setting the trade, you can set it here. So I could go from normal, which is just a normal stop loss, and I can go to trailing. Now, when I put trailing stop loss, it will ask me to set my trailing stop loss based on how many pips away from, points, how many points away from my current price I want my trailing stop loss. Let's say I want my trailing stop loss to be here, because I can see that's like a previous kind of like resistance. Let's say it was 11944. So I have to do a little bit of maths in my head. Good thing about this is that as you're working out what the distance is, you can just type it and work it out by just putting the number in and seeing what it looks like on the chart. So rather than doing the maths, okay, that's all right. I set it at 150. Let's say I set it at 170. So therefore, it's just above this little resistance here. So I'm going to place my trailing stop loss. So obviously, it'll tell you here how much you're willing to lose if it hits your stop loss and the current position of your trailing stop loss, because obviously price is moving right now. I also set a trailing step. So the trailing step means that the current price has to move 5 points for your trailing stop loss to kind of move with it, track with it. So it needs to move 5 points down before it moves down, for example, or it can move 10 if you make it 10. So I'm going to make it 5 for the sake of this one. So now I've set my trailing stop loss. So now what happens if price sells off, my trailing stop loss will move with price down, and if price reverses, it will stay where it was at which it was moving down with it. So it'll move down, down. If price starts reversing to come back, it won't move back up. That's for if I take a short position, and the same works the opposite way for a long position. Once again, you can also just use this tool here to kind of move your trailing resistance stop loss where you want it if it's not exactly where you want it, and you can go to positions and edit it here. Also, you can see that the T is there denoting that's a trailing stop loss, so you can get all the different information as to the trailing steps and the distance if you want to adjust those. That T just lets you know it's a trailing stop loss just in case you forget that you set a trailing one. Then you also have a guaranteed stop loss. Now, guaranteed stop loss is a type of stop loss that ensures that your position is always closed at your pre-selected price. Necessary losses during times of volatility. So I've got my open position here, my open short position, and it's going against me. So I'm actually in the red now. I'm down £30. No. So if I want to set a guaranteed stop loss, the reason why you'd want to set a guaranteed stop loss is for situations in which maybe that you think the market is really volatile, and the stock or asset could potentially gap up or gap down after market close into the open in the next market. Now, to protect yourself from slippage, which is, for example, if I'm in a position now and I've set my stop loss here, but then the price gaps past my stop loss, I could be liable to lose more than what was in my stop loss. So to prevent that from happening, you can set guaranteed stop losses so that no matter how far past your pre-existing stop loss the price gaps past, you only lose what your guaranteed stop loss was set at. Now, a guaranteed stop loss means that you pay a slight premium, but a guaranteed stop loss might be worth using if you're trading specifically high risk and high volatile assets such as leveraged ETFs, for example. So to set a guaranteed stop loss, you can go here and click guaranteed here, and then you can set the amount of points away from your existing market order that you want your stop loss to be. As you can see here, it says the stop premium is 1.5 pips. So you're only charged if your stop is triggered. Please be aware you add the 1.5 point premium to your margin. Okay, cool. So at least it lets you know about the premium that you have to pay on your margin for placing a guaranteed stop loss order. But the good thing about it is that if your stop loss doesn't get triggered, then you don't have to pay it. So it's just a safety precaution a lot of the times. Once you click there, you enter your guaranteed stop loss, and just like a normal stop loss, you enter how many points away you want it. You can drag it, and it will be in place. And if it's triggered, then it will be executed. So I'm going to place another sell order, 1 point per pip. I'm going to set a guaranteed stop loss of 100 points. That means I'll lose £100 if it's executed, and I will place my order. So then if I check my positions, as you can see here, this is my trailing stop loss. This is my guaranteed stop loss, little G here, and it gives you all the information on your guaranteed stop loss here. So the margin is the amount of money required in your trading account to make a trade. Now, I'm not going to go through this calculation, but this calculation on the on this line here is how to calculate what your margin requirement is. It's the price level times position size times margin requirement. So if I wanted to take a long position in a DAX, I would just go buy. Let's say I want to take £1 per point movement there, and yeah, so my margin requirement would be 58999, which is how much money I need in my account to take this long position. And because I got £5,000 in my demo account, then it would be no issue executing this position. But let's say I wanted to take a £20 per point long position on the DAX and press buy here. I will need £11,794 in my account to take that long. So I'm about £7,000 short. So let's see what happens. If I press place, I got insufficient funds, add £7,684.48 to my account to take that position. So as I said before, a margin is just showing you how much you need in your account to enter a certain position depending on the stock it is. So the margin requirement you need differs based on different asset classes, because the different asset classes have different leverage requirements. Now, if what I'm saying sounds like French to you, don't worry. If you want to get a more in-depth explanation on how to calculate margin and the definition of all these trading terms, check out my Trading for Beginners playlist, where I go through the fundamentals of trading for beginners in a 10-part video series. And finally, we're going to talk about forced open and net off, which is these two buttons here. Forced open is a function of IG's trading platform, which enables you to open a position in the opposite direction to an existing bet on the same market. The result would be a long and a short position on the same asset. So if I took a forced open position on the DAX, that means that I could take a long and short on the same asset class without exiting each other out. So I'm going to take a sell position on the DAX now as well. So as you can see here, I'm in 2 active positions at the same time, one long, one short, same position size, and they're both actively trading at the same time. If I go into the position chart here, as you can see here, I've got DAX £1 per point movement long, and I've got DAX £1 per point movement short. And that's what a forced open is. Now I'm going to close this short position. I'm going to try net off now. So now I'm in a 1 long position in the DAX. If I click net off and I take a short position here, I'm going to take a short position for £2 per pip. So the net off means that because I had £1 per pip going up and £2 per pip going down, I keep saying pip, it's not X, point. £1 per point going up and £2 per point going down. The net off was going to be a short position of £1 per point. So net off means that they cancel each other out and the sum total is what you get in one position. I personally prefer to use forced open because if I want to be in 2 positions, that can be a form of hedging, which is sometimes useful depending on your trading strategy. But now that you know the difference, which one are you going to be using and why? Let me know in the comment section below. And as promised, if you want to take some trades in some of the most popular stocks outside of the regular trading hours, all you need to do is search for the stocks called all session stocks, such as Uber, Amazon, Coca-Cola. With all session stocks, you can trade from 12 noon to 10:30 p.m. Monday to Thursday, and 12 noon to 10 p.m. Fridays UK time. So as you can see on this graph here, these are the normal US trading hours in the UK, and these are the hours you can trade all session stocks on IG. And here are some of the most popular all session stocks. You've got Tesla, Apple, Amazon, Netflix, AMD, Facebook, Microsoft, Alphabet. And if you go to this link here, I'll put in the description section below. It'll give you a list of all of the stocks that fall under the all session banner. So you can get the NASDAQ stocks. Here's a list of the NASDAQ stocks that are all sessions. The New York Stock Exchange all session stocks. So here's the list. It's quite a long list here. And the New York Stock Exchange Amex all session stocks. So some of the ETFs here, giving you the opportunity to trade some of the most popular US stocks out of hours, such as Uber, for example. I'm going to be looking to make some more videos just like this. So for more IG trading tutorial videos on how to use the platform on desktop and on mobile, hit the subscribe and alert button to stay updated with all upcoming videos. It's Any, aka the NocTrader, signing out.